Hello, I'm Nick from Income Digs. Welcome to this video tutorial where we show you exactly how we use different tools to execute the various business processes within the world of real estate investing. Today's video will focus on analyzing rental properties. We're going to be using a tool that is available for free at the Income Digs website, the Rental Property Analyzer. We're going to walk you through how to look at a potential investment, look at some of the key numbers and fill in the rental property analyzer and get used to how it works and what different variables can adjust and influence the ROI of your investment. So again, this analyzer is available for free. It's very comprehensive. Today we're going to keep it pretty basic, just focus on entering some data. We'll have some follow-up videos that will play with some of the different options for adding financing, adding some improvements, and everything like that. But to get started, we're going to start with a hypothetical property here, an apartment building. We have the marketing data for it that we got from a broker, and we're just going to fill it in. Again, we're not going to adjust too much here, just get a lay of the land. So if we look to the right of my screen here, this is the marketing package we received from the realtor. Property address 700 Parkside Ave in North Buffalo. And we got some data. I'm not going to be too concerned with this yet. We will notice here 12 units, 12 apartments, and 3 commercial units, so a total of 15 units. And we'll roll through this here. So I'm going to start filling in my rental property analysis to the left. To begin, it's just some basic info, the property address. The type is an apartment building, so this is a drop down. Click the arrow, click apartment building. Total units is 15. Again, we have 12 residential and 3 commercial. The square footage, I'm not sure if we have that on here yet. Let's leave that blank for now. I think it appears later in the marketing data. The purchase details, this is just a guess to start. When do I purchase the property? So let's assume that maybe on the 1st of March I close on the property, and that's just going to help us for our long-term cash flow. Purchase price, I'm not sure what I'm going to pay for it yet, but for starters, let's just put in the asking price. We can always tweak this as we go. Often I'll start with the asking price here, and then as I start negotiating, I'll have a better idea if whether or not I can get it at a lower price, and then I'll adjust and say, if I get it at this price, it'll work out better. So we look over the marketing package. They're asking 1.7 million, so let's put that in. Okay, again, we're going to assume that we have a down payment of 20%. That auto-fills. We can adjust that. I rarely pay 20% of my own money down on properties. We use a lot of private money, things like that, but let's keep it simple for now. Let's assume that I have all of that cash in the bank and that I'm going to pay $340,000 down, plus, let's call it 1% of the purchase price in additional closing. So I'm going to need $357,000 to close the deal. Okay, what's my loan value? Again, let's keep it simple. Let's say it's the purchase price minus what I put down. So that's 1.36 million. Let's call it a 6% interest rate, 20-year, 10-year balloon. We can explain all this later. I'm just going to fill it in for now, and we will keep it rather simple. So I'm going to skip over the loan 2, I'm going to skip over the equity partners, and I'm going to go down to the income. And again, this data to start is going to come directly from the marketing package. We're obviously going to go through the due diligence of checking those numbers and making sure they're accurate. We could even assume increases or decreases in rent. We can assume that we're going to do some work on some units, things like that. But to start, let's keep it simple. I'm going to pull this over a bit. So we see all of our units laid out here. I'm going to just take the annual rent potential, this high number here. They're saying that if everything was filled, here's what you would get. And that's $178,992. So fill that in, that's annual. So we have the option here to drop down and go annual or monthly. Okay. Now I'm going to scroll down to the operating data. So they laid out pretty nicely. They do have a vacancy percentage here, and they assume 5%. So I'm going to fill that in, 5%. They have other income of commercial reimbursement. I'm going to fill that in, $12.65. I'm not really sure what that is yet, but I will figure that out as I go through the process of negotiating the deal. All right, then you see some of the other expenses laid out here. Real estate taxes are $87.96, so I'm going to go down to property tax, $87.96. And again, make sure that your annual or monthly matches. So everything that they're giving me is an annual, so I'm going to make sure that when I fill it in, it's an annual as well. Property insurance is $7,500. I often find with these that the current owners have insurance at a lower rate than I can get it at, and that's probably because they don't have enough coverage. So I put this number in to start, but I'll generally add a few percentage points because I know that my insurance quote is going to be a little bit higher. Offsite management, they have that as 4%, so $7,015. Now, you may have a different property management process. For example, you might have several units and you pay 5% to your property manager, so you'd want to put in whatever that number is for you. But again, just to get things down on paper, I'm going to take their numbers exactly, and then from there I'm going to tweak them. Repairs and maintenance, they have $10,475, and it says here this includes lawn care and snow removal. So I'll put this in $10,475, and I'm going to keep the trash removal 0. I'm going to keep the landscaping and plowing at 0. Utilities, they have $11,250. Legal, $2,750. And they have a $3,000 improvement reserve. That's per year. Okay, it looks like that's all they have. So I've added all of their data in there. So now what we're going to do is we're going to bounce over and we're going to expand the rental analysis and look at how this thing looks on paper. So I'm going to make this nice and big for us here. So over to the right we have our KPIs, our key performance indicators. Now just take this with a grain of salt. This is our first pass at this property. All of these numbers are going to change. We do not manage properties the same way that the current seller does, so our expenses are going to change. Maybe there's opportunities for increased revenue. Maybe we think they're overstating their revenue. Whatever the case may be, these numbers are going to change, but what we're doing to start is just to find out how close we are. Is there a potential for a deal here or not? So again, we're assuming that we're paying 1.7 for it, okay? So based on that, 1.7, our cap rate would be 7%. That's what the marketing package suggested too. So what is the cap rate? The cap rate is your annual return on your investment if you're paying cash. So 7% is not super high. It's not super low either. It depends on the market as to whether or not this is an acceptable cap rate. I will tell you that I would never buy anything at a cap rate of 7%. I generally look for deals that are a lot better than that for my market. Part of the reason for that is I generally have a lot more financing. I'm not putting down $340,000. I'll have a lot more financing, and therefore I need a higher cap rate to cash flow. Cash on cash return is 1%. Debt coverage, some of these numbers are pretty bad at the onset. So you'll find that a lot. When you're given the marketing package, they're shooting for a 7% cap. Well, it's going to be hard to find a buyer that's going to invest at 7%. You pretty much need a cash buyer who wants to sit around and not do anything with it. So at the onset, at $1.7 million, this deal doesn't look that attractive to me. You see that our net operating income is $120,000 annually. Okay, that's fine, but that's I'm putting down $340,000. So it's going to take me quite some time to get that back. My annual cash flow is only $3,600. So you see that it's going to take me over 10 years to get my investment back. So the point of this was not to look at that specific deal, but it was to familiarize ourselves with how this works. Now, my next step will generally be, okay, 1.7 isn't going to work. What if I could get them down to 1.2? How does that change the numbers? Obviously, things start turning green. So you can see here, we're going to zero in on where we can negotiate to. Now, that price change, obviously it's $500,000 difference. It's a big deal. Who knows if they'll accept that. We're deal with that later. But really the next step for you as a potential purchaser is to dive into these numbers and figure out if any of them need to be increased or decreased. Obviously, you're going to want to see the units, see if there's any improvements that can be made, if there could be potential increases in rent. And the analysis sheet allows you to work through some of that. You can put in some capital improvements. You can assume some annual percentage increases in any of these numbers. And you can also talk about when you're going to sell the property and how that's going to look. And we can see what your internal rate of return is going to be on that. So we're going to get into all that in the future videos. But for now, just want to get you familiar with this. Now, you can use this sheet whether you're looking at an apartment building like we just did, or maybe you're looking at a single family home, a duplex, a triplex. It'll work for anything. It'll just be on a different scale. So go ahead and give it a shot. Maybe use it on one of the properties you already own and manage. See how your numbers would work out when they're put into this. Okay, so that'll do it for now. Again, we're going to expand on this in future videos. We're going to look at how to add capital improvements, how to add a second loan, equity partnerships, all of that. So in the meantime, please leave your comments and questions. If there's anything specific you want to see with this, let me know. Download the rental analyzer for yourself and start playing around with it. Let me know if you have any questions about it, or if you want to put in your own property and you have questions about how it would work, let me know and I'll help you out with that. And be sure to check out all the other resources available at incomedigs.com. Thanks for watching.